Welcome to the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening online from September 23rd through the 25th for our worldwide audience, with over 50 renowned real estate and blockchain experts and academics representing over 30 countries from around the world. Visit blockchainrealestatesummit.com for more information about the event and to subscribe to our newsletter for the latest updates on innovations in the blockchain and real estate sectors. That's blockchainrealestatesummit.com. Enjoy the show.
Hello, everybody. Welcome back to another episode of the Blockchain Real Estate Podcast. I am Michael Flight. Happy to have everybody here today. Want to thank our sponsor, the Blockchain Real Estate Summit. Check it out at blockchainrealestatesummit.com. We're having another 3 full days of festivities and everything you need to know about real estate tokenization, blockchain real estate, and the future of real estate, because we've added a lot on AI because blockchain and AI seem to go together right now. The dates for that are September 23rd through the 25th. And again, it's 3 full days. We cover the Americas, we cover Europe, we cover Asia. Last year, we had speakers from more than 40 different countries. So it's going to be an exciting opportunity. And before we get into the meat of the podcast here, as always, this is not investment advice. This is not accounting advice. This is not legal advice. You should check with everybody that you need to in order to make sure that you are making the right decisions for yourself. Without further ado, I want to introduce a guy that I met at RaiseFest last week or 2 weeks ago, just out of the blue. And the first night I'm there, and the only other person that would know anything about tokenized real estate is Domingo Valadez. And Domingo Valadez is with Homebase, and he's going to give us a little bit of a background on him. But we are really excited. We had a great time. We went out to dinner, and just really exciting. Hit it off right away. This guy and this team is super sharp, so I'd like you to hear more about not only tokenization of real estate. He was one of the pioneers. They actually did their project on Solana. They were one of the first real estate projects on Solana, proving that Solana might be the financial system of the future. We don't know. The jury's still out, but we really like Solana, and Domingo really likes Solana. And the other thing is that they have pivoted now. They're doing investor management software, which I think the only way that we are going to get to tokenized real estate is to have a better back end so that it's not a crypto experience, but it's an investor management, investor dashboard. So people don't have to know that they're investing in a token. They know that they're investing in an investment. So with that, Domingo, tell us a little bit about yourself, Homebase, the team, Solana, and what you're doing now with the investor management software.
Absolutely. First of all, thank you so much for having me on, Michael. It was such a pleasure meeting you at RaiseFest, and truly serendipitous to sit across, from the only other person knowing tokenization. To kind of give a background on myself, as you mentioned, my name's Domingo. Originally from South Texas, born to immigrant parents who came from Mexico. For them, real estate was a really big path to financial freedom. They were dentists by day, real estate investors by night. So I grew up going to a lot of open houses. That was my first foray into real estate. Ended up going to Penn, studied finance and real estate there. And then post-graduation, I was at Google for 5 years, right, at product strategy for the majority of my time there. Left around 3 years ago to start my journey building Homebase. And so we first started off as a crowdfunding platform. And the way we were fractionalizing these properties was using tokens. And so, that's when we used Solana as our backend. We were the very first to tokenize not only 1, but 2 different properties on Solana. Those homes were actually showcased in Times Square, which we have photos of. Like,
Really?
It was really. Yeah, it was
on the
Brex.
big board, right?
Yeah.
Really.
Yeah, I mean, Brex is our banking partner, so they showcased it, and it was really funny because
You're
it
gonna
was
have to
after
send
we
me those
closed.
because we need to add those to the podcast. So
Absolutely, I'll go ahead and share it after this. But
And I'm going to interrupt you again, just to show how smart Domingo is. Penn graduate, Google graduate, and now he's in tokenization and he's in real estate. So he started out really smart, and then he went into the probably some of the dumber things because I think, there's a big market for me and Domingo to do meme coins. But anyways, let's keep going.
So true. But the thesis behind Homebase was always simple. It was the fact that it was harder for me to own real estate than it was for my parents, who literally came to this country with nothing. And the thesis there was, how do we make this asset class more accessible? And so, like that to us was tokenizing properties, letting people invest with as little as $100.
Hmm.
We successfully acquired and syndicated two different deals. Our homes ended up going viral on social media. So you can actually find us on Twitter. You can see those posts. And that helped us build an investor base of about 3,500 accredited and non-accredited investors throughout the US. And
3,500 investors. That is fantastic. And you got those within like a few months?
yeah, all of that, like this entire saga really happened within a year of like us going live, selling out those two properties. And I like to say, like, we never did any general solicitation. Like, these things were not being shared publicly until they were closed.
So
So
you
we were
should
like
have
very
really been
aware of,
on stage at Raise Fest showing people how to pick up 3,500 accredited investors really on the cheap and within a short period of time. And no
yeah,
real estate experience either.
yep, no, outside of like just buying, a fourplex myself. But that was really the journey. It was, how do we become this consumer marketplace that lets anyone invest? And after we did those two deals, we realized, securities regulation made this quite difficult to scale. We could never do general solicitation. Reg A felt incredibly expensive. We'd seen a lot of other crowdfunding platforms effectively like fail, and that was because it's really hard to build a venture-backed business when most of your assets are real estate. It's very capital intensive. And so with that journey, we actually learned a lot about, all the pain points that go into syndicating. We realized that's all we were doing. We're just syndicating deals, but instead of shares, we're using tokens to do it. And then we're like, we built all this software for ourselves. What if we, start selling this software to others? And
Hmm.
so we actually pivoted the business last summer. Um, and then, like, to the point you made earlier, we became an investor management software, and we realized there was already a lot of players in the space. However, we thought our unique point of view was that, we did it ourselves. We knew the exact pain points. We built consumer marketplaces, so we know how to build beautiful experiences for both LPs and GPs. And then we went live. We've been now live for about 7 months. We have about 16 going on 17 different sponsors we're now supporting, with about 75 million of assets on the platform. So it's been
Oh,
a pretty quick
fantastic.
transition.
Fantastic. So I want to like just put a pin in that because I really want to get more into the investor management software and your competitive advantage and everything. But I want to know more about your experience. Like, how did you select a blockchain? How did you decide you were going to do, certain things? And even how did you decide what your minimum investment was going to be? Or how did you decide what type of offering it's going to be? And I'm assuming that it was all U.S. investors.
Yeah, so it's all US investors. The way we chose Solana was really like, it was at the point we were deciding what chain to build on. All NFTs were starting to go viral on a lot of different platforms, and we saw Ethereum get incredibly expensive, or it was like
Right.
$100 plus per transaction. And
Right.
then I didn't know which L2 to go with. I really just wanted to go where users were. And so that to me was like Solana. And then soon after we chose Solana, FTX blew up, and like all these things happened. But we ended up getting to meet some of the leadership team at Solana pretty early on in our journey. And we just had a lot of confidence with them. Ben Sparango from their team had the opportunity of speaking with Anatoly, with Raj, and
Who are
incredibly,
Anatoly and Raj for people that don't know anything about crypto?
yeah, those are the founders of Solana.
Okay.
So they took time out of the day to talk to me. I fangirled over them pretty hard when I got to meet with them. But it was
Well,
really, really, really cool just to get their perspective on, where they saw their vision for the chain, what problems they're trying to solve. And that to me gave me confidence to continue building even through like the incredible bear market that was 2022 and
yeah,
2023.
and we're experiencing a little bit of that now with some of the issues with meme coins, but I think that hopefully Solana's going to come out the other end. And one of the things that I think is unique about Solana is they have a lot of institutional people that are very interested in the chain, but they have a like raving fan group of retail investors that really want to see projects succeed. So was that your, situation over there? Is that, one of the things that went into your decision? Or was it like the cheap, I shouldn't say cheap, but inexpensive transactions, or you just give me a rundown of, kind of the things that you ticked off on Solana and why it met your criteria.
Yeah. So to us, it was really like it was inexpensive relative to other platforms. To your point, they had a pretty diehard community on Twitter, and I was pretty on top of Twitter at the time. Like how we even built our investor base, it was all organic Twitter marketing we did just by being like in the trenches, understanding what the narratives were, and really adding to those narratives. I think it's very rare when real estate related things in crypto go viral.
Right.
And so like we were one of the few posts that did, and that's honestly what helped us build like our entire investor base. So yeah, and then getting to also meet other founders, building on Solana, like very smart, educated people. And these are the people that like are inherently are not grifting, but building real businesses that are still live today.
Well, in Solana, did a thing. I'm not sure they're doing it anymore, but they used to have in major, and they had like the most kick-ass offices here in Chicago, and I know they had offices in LA and in New York, where they were incubating, founders and trying to help them, get moving with their foundation.
Yeah, so we were one of the founders had the opportunity of working in the New York City Solana office. The one team that was not venture backed. Every other team was incredibly venture backed.
Well, real estate is always the ugly stepchild, but in the end, um, you see a ton of, and I right now am constantly amazed at the AI projects that are getting funded, and they're basically just agents on top of ChatGPT, which will go away once ChatGPT sucks them in. But they're getting like 10 and $25 million valuations. And it was the same thing early on, when we were trying to put together our fund and trying to like, issue tokens and do certain things. I was trying to convince, blockchains. It's like, well, to me, you're a value transfer network. So wouldn't you want to try to get, assets on chain instead of building one additional DEX or one additional, automated trading platform or one additional way to speed up trading? Because it's like the only way I believe you're going to get a lot of other things on chain is that there's real world use cases, and it's not just we're passing shares back and forth between a bunch of degens.
Yeah, I think crypto has an incentive problem, to be honest. There's too much money to be made in the short term by just launching tokens and like, false trading things between different dexes effectively. And there's also people at the foundation that have that longer term view. But given how slow some of that moves, like they're the minority voice,
Yeah.
I'd say it's tough, right? It's like you're balancing both short and medium term, and you know,
Well,
people
it
are
may
also
not look like it,
founders.
but
Yeah.
I'm also a fitness app CEO, and we're, migrating our, fitness app from one chain to another chain. And the just to launch the token, there's just it's actually worse than trying to put something together in the current financial system in the US, because everybody's got their hand out and there's all kinds of I've seen behind the veil. I've actually one of the largest meme coin, GigaChad, is our main sponsor for our fitness festival in Europe. And when you see behind the curtains of an $800 billion market cap coin, it's like, yeah, this definitely. I was hoping it would be the financial system of the future, and I'm not sure we're going there. But that
Yeah.
doesn't that denigrate some of the great financial rails that are being built right now, and I think for the long term are really going to prove themselves out.
Oh, absolutely. I'm even saying that now with like back when used to send out distributions for the two properties we were managing, we would do that as USDC, and it was
Hmm.
never an issue of money being settled. And now that we're helping sponsors send out ACH, check, wire, I'm like, you're really gonna send a check? Like this thing takes so long, you don't even know when they cash it in. Like, so it's just funny because I saw what the ideal situation looks like with USDC and instant settle times, and then now I'm seeing what the complete opposite end, how people still send money around.
Having just the only consumer bank account that I had, I couldn't do an online wire for a closing that I had last Friday, and I had to be at the bank 4 times. And and then you're still never sure that the wire goes through. So everybody says, "Well, I could send my crypto to this wallet, and I don't know." It's like, well, say the same thing with a wire transfer. Okay, if it's not exactly the right thing, and I'm still waiting to see if the wire cleared, and it's past 3 o'clock here in Chicago.
Yeah, I mean, it's why stablecoins is one of like the areas in crypto that's been getting a lot of adoption as of late.
I like it. I like it a lot. I just had a conversation. I was just as a guest on a podcast, and he was asking, what's great about crypto, and I said, it's instant value transfer. And originally, I was into Bitcoin because it's instant payment. To me, Bitcoin is too volatile to really be a great payment system as of this point. But as you said, USDC, we work with clients outside the United States, so USDT. And if you look at the widest adoption in crypto, it's USDT. But I pay, people that work for me in USDT. And so it goes to Colombia, it goes to Romania, it goes to the Philippines. And before, I was just getting, raped by PayPal, for transaction fees and, the dollar conversion. And this, it's like, well, it's a dollar, it's a dollar, it's a dollar.
Yep. No, it's incredible. You realize the value of it when you start going back to old traditional payment rails, and you're like, some of this is so archaic, it's crazy.
Yeah. So let's talk about why you decided to get into investor management and what you built with Homebase and some of the experience that you got from Homebase that you've been able to translate. You already mentioned the fact that you know what the pain points are from being an operator. What's some of the stuff that you're solving with Homebase?
Yeah, so you know, I think a lot of people go into like tokenizing real estate thinking they're one of the first people to do something like this. And then you realize that the syndication market's actually like a multi-billion-dollar business that's in terms of number of transactions that are happening. And so that to me was a big eye opener of like, oh my gosh, there's people that are much better at doing this than I am. My expertise is building software and like managing that. What if we can just, enable people to not have to deal with all the back office stuff and focus on what they care about, which is, deal making, talking with investors, all that. And so that's really where the motivation for the pivot came from. It's also much easier to scale software business than it is to start syndicating at scale
Right.
as you're building out this marketplace. And so
And
that was
better
really
margins.
exactly much better margins. And so in terms of just like a lot of the learnings that we had, so it was really just like how we built our software. So I'd say some of the main pain points we're solving is how do you manage investor relations when you're having like 10, 20, 30 people participating in deals? And now you're not just managing one, but you're managing two, three, four. Like it starts to really take its toll on you as an operator. The second being like, the actual fundraising process, like having to close on, $1 million, $2 million in a 30 to 45 day window can be incredibly stressful. And managing all the documents you need to sign, managing all the conversations. And then the last piece I'd say, like in terms of three main use cases, distributions, like sending those out on a monthly, quarterly basis, incredibly painful if you're having to pull everyone's bank account, do that for 30 people over 5 investments. So we help automate a lot of that with the software as well. So really the entire purpose is how do we save time for operators, save them money so that they can focus on what they care about. Um, and so yeah,
And going,
that's really the philosophy for how we're building Homebase.
okay, and going back to your start, were you paying out monthly or quarterly on the houses?
We were paying monthly and we were sending it to about 40 investors per home.
Okay.
So it was 80 in total every month.
And that's the key thing because in our company still does institutional real estate, and so we're used to paying out monthly. We're used to reporting monthly, and I'm going to say you said billions of dollars in syndications. If you include institutional real estate, we're in the trillions. That's a key thing. A lot of syndicators are only set up to do quarterly. But if you get the right, management software, it shouldn't be, an issue whether you're doing it quarterly or monthly. Because it's like it's there, it's doing the same thing. Your property manager is, sending the money into your bank account. You should be getting monthly reports. So it should, do all that stuff. I do want to talk to you a little bit about you said it helps with the capital raise. So is there a CRM, customer relations, management as part of your offering? And where do all the documents go? So explain the whole process to us.
Yeah, so we have a contact management system. So like anyone who makes an account, you can track them. Are they accredited? Have they sent you any sort of like accreditation docs? Are they KYC'd? Like all the typical checks we store for that. But in terms of building a CRM like a HubSpot or a Salesforce,
Hmm.
we're not trying to build that in-house. Instead, like our philosophy is we want to integrate natively with top CRMs that exist already.
Right.
And
That's
so
very
you're sending out emails for that, and we're just pulling it into Homebase.
okay. So it,
So
it
that's a
comes in as an API, so you can just connect.
Yeah, so that's the philosophy. We're going to be going live with that next month. And so the first one we're going to be doing is active campaigns, just because we know a lot of operators use that. And then
All
the
right.
next one we go high level.
And I just want to stress the fact that that is super smart because a lot of investor management software, doesn't necessarily integrate with, those existing things. Or going back to the tokenization stuff, there's absolutely no idea about integrating with anything. It's like, oh, we just do everything here. So it's key because if you've been doing this for a while, you don't want to have to like port over a ton of stuff. You just want like, boom, I set up and I go. So that's really super smart setup.
Yeah, funny enough, one of our competitors recently raised a Series B, and they cited that there's about a 96% retention rate, based on people once they sign up, to the point of it's incredibly painful to migrate. And so the easier you can make that migration flow, such as including, native API calls that you can integrate, like it makes it that much easier for them to move. And so that was the philosophy, given we're a late entrant to this market. How do we make things incredibly easy to move over from existing places?
Oh, very cool. And so with the document stuff, I'm assuming that you've got DocuSign or some other stuff all,
Yeah,
um,
so we have HelloSign that's integrated into the investment flow.
okay.
So when someone commits to an investment, they go and sign everything, you get a copy, they get a copy, and then they can send you the funds.
Okay. And I'm assuming because a lot of syndicators don't do KYC, but you're from, the tokenization part where you have to KYC everybody. That's all, the accreditation process and the KYC is all, the syndicator decides what they're going to do.
Yeah, so we actually default everyone off. We actually thought everyone was gonna have it on because like we needed it back when we were taking money, but
Right.
everyone's like, we don't
Right.
want this. So we
Right.
actually turned it off for everyone.
Right. Well,
Uh,
I've explained to a lot of syndicators at some point, they're really gonna be in trouble since they're not automatically KYCing people, and it should just be a best business practices until the laws change. So if they revoke the Bank Secrecy Act, then we won't need to worry about KYC. But until then, it's probably a better practice to paper over it.
oh, 100%. So now we do it as an opt-in. Like if you want to do it, you can. Before we used to default people were getting too many complaints from sponsors, so we turned it off.
Well, the problem is that the KYC, slows thing up, for a few days. And if you've already got a relationship with, because you're supposed to have a relationship with people,
Yep,
the KYC is, just more of and it's, more of an expense too.
absolutely. Absolutely. So yeah, that's really the way we designed it. And yeah, the flows are there to make the investment process as incredibly easy as we can make it. And given we started off as a consumer platform, we had over 3,500 people make accounts. We got a lot of data as to like what usually stumps people, how do we make the UI better? And so I think a lot of our sponsors have really liked the experience that we provide.
Okay. Okay. And then have you had any sponsors go full cycle yet, or you just you guys just pivoted how long ago?
Yeah, so we started building, like we started testing out a lot of different ideas, but started testing this particular idea in March. And then
Okay.
we really of last year. And we really so about a year ago, but we did not go really live with an MVP until June of last
Okay.
year.
But you've got 16 sponsors on board already.
Yeah, we've migrated people over at this point from most platforms.
Nice. Very nice. So,
Yeah.
and why are they migrating from those platforms? What is special about Homebase?
Yeah. So honestly, when we were looking at the market, I'd say a lot of people would say it's quite saturated. I'd say the way we were thinking about it was if you actually look at the makeup of the teams of each of these platforms, they're mostly salespeople. And so what that basically tells you is their product's really not getting that much love.
Mm.
And so you go into a lot of these platforms and you realize it's either quite clunky, there's incredible amount of features because people probably customize it for like every long tail customer that asks for X thing. And so the average customer feels like they're overpaying, not using all the features, and no one really likes it that much. And so that to me was a signal of like, okay, if there was a clear winner here, they'd have like 70% market share and like they'd just be crushing it. But because it's so fragmented, there's actually an opportunity here to come in with, a fresh interface that's incredibly simplified. And that's one of the biggest reasons people migrate. It's like very easy to navigate on our platform on Homebase. The second piece is our pricing. So every other competitor charges based off AUM. We charge based one set price. My thesis is I think software is going to get completely like more and more commoditized. Like we see people spin up apps overnight now.
Right.
I think big teams, it's going to be really tough to operate software companies as big teams just because like now things are going incredibly lean. And with that, you can charge less. So that's been like
Well,
really
I've started using AI to write my own investor management software. I'm joking
exactly.
around.
But I was gonna say exactly though. It's like it's the point that a lot of people can build it. So we basically want to make Homebase a no-brainer option. It's not that expensive. Use it for your deals. It's one set price. Then the last piece is like getting to work with our team. Like at this point, we've met hundreds of operators. We try to make intros where we can. We run a podcast. We've had over 50 operators on. We share with our investor base of 3,500 people. So that's always potentially a lead for you for a future deal. And so we really just started to build this network where people have really liked it and have made the switch.
Okay. And my next question is, do you do multiple asset classes? Like I'm involved with shopping centers and retail real estate, and I've seen a number of investor management platforms that don't do really well with other, forms of funds, and primarily are focused on multifamily.
Yeah, so we can do any real estate related fund. I say what we will not be good at is things outside of real estate. And we're trying to stay very verticalized to real estate. So anything real estate related we can handle. And that's going to be our core focus.
And so you're not going to be able to do. What do you think about oil and gas? I mean, those are pretty typical. Do you
Yeah,
think
so
that?
if it's just an operations business, then we won't be able to service it. But if it's like you're owning the real estate and that's a portion of the business plan, then yes.
Okay. Okay. So, and do you have like room to do like a fund of fund models where you're just the GP?
Yes, we actually have one customer that's launching a fund servicer business using Homebase. And so they've been spinning up a ton of different fund to fund managers using Homebase to do it. And like they're servicing each of them. They've
Oh,
been an
very nice.
incredible launch partner for us because we've been building a lot of fund to fund capabilities for them that's applicable to a lot of other people.
Okay. I forgot to ask you, what's your website, and where do people find you?
Yeah, so our website's homebasecre.com. And that's the investor management business. If you want to check out like back when we were tokenizing properties, that's homebasedao.io. And you can find me on LinkedIn. It's just Domingo Valadez. And I post daily. So if you see cringe posts, if you could please just give it a like.
Okay. But Domingo, is there anything else you want to talk about before we, kind of summarize what we discussed and what your path is moving forward?
Yeah, so I really want to like just bring it full circle. So like we started Homebase with the thesis that we want to give more people the opportunity to invest in real estate. And the way we were doing that was us tokenizing it ourselves. We ended up then pivoting to now supporting other sponsors, and we've been able to scale much faster. Like now we have 75 million of assets in the platform. Our goal is to bring it full circle. We do eventually want to launch a REIT. And with that REIT, we want to invest in some of the top operators on Homebase. And the benefit of going this route, we actually have like first party data as to how everyone's doing. We know all their distributions, we know their P&Ls based on property management, reports getting pulled in. And then we want to invest with some of the top syndicators. So it's going to be, I think, a win-win for both like the entry level to this REIT will be much lower than traditionally investing in a syndication. And for LPs that, are invested in the syndications where the REIT also comes in, it's going to be a liquidity event that's, earlier than 3 to 5 years, the typical hold time. And we may or may not be tokenizing that REIT. And so that's really how we bring it full circle.
I'm going to talk you into tokenizing the REIT because then the REIT could be a source of liquidity, and across, the world at some point.
Absolutely. That would be like truly amazing because I love like the crypto space. I think there's a lot of amazing applications from it. It's why we first started building Homebase and tokenizing things. So if we could do it by tokenizing it, I would love to do that. If you go to HomebaseDAO.io, you wouldn't even realize we were a crypto company because ultimately what we were selling was the ability to invest in real estate. And so that's the same experience if we do tokenize it that we're going to provide.
Sure. Fantastic. Well, I appreciate, you coming on, talking a little bit about, your adventures, how you've had a really great experience with Solana. And, for most people that don't understand, Solana is a blockchain and it's a major financial blockchain. They were designed to start doing the financial transactions at a faster pace than what was currently out there. I appreciate the fact that you guys tried to pioneer something and tried to jump in because tokenized real estate is really hard. And I can tell you guys are smarter than me because you guys pivoted out of tokenized real estate and went into like just plain old real estate. Which is why I'm, pivoting into other things like fitness apps and AI. Because, at this point I've done just about everything you could do in real estate, and I'm looking for a new challenge. So I guess the grass is always greener, right?
For what it's worth, I do think we'll crack the case and get more real estate on chain. I just think it's always, taking longer than we anticipate. Although we do have an administration right now that's pretty pro crypto, so I think things will likely accelerate in the
Yeah,
next
but
4
like I
years.
said, and we discussed, I was out at ETH Denver last week, and there was like 3 or 4 side events, and everybody's talking about RWAs, which is real world assets on chain. But most people, when they say RWAs, it's tokenizing treasuries, which is what they're already doing with stablecoins. So I don't think it's like anything really unique. The big thing is going to come when they can tokenize stocks and can tokenize real estate. And I think, and a lot of people also, even when you're at these events, they think that tokenizing real estate is we're putting title on chain. And the title on chain is going to be great. It'll be good for record keeping, but I don't see that as the major event. The major event is what you were doing, which is creating ways to create real estate securities or pools of capital that you could bring in and actually own real estate. So I think that's the future, and that's what we're looking for. And at some point, I'm going to convince you that your investor management software is going to be the back end for my token. So.
We should definitely talk more about that. I would love to.
Yeah, because I think that's the future. The biggest problem with tokenized real estate right now is most of the technology people don't understand how the pieces of real estate fit together. And they want to give a crypto experience And I think if you get a beautiful, as you said, user-friendly investor experience, that's really going to onboard the next, billion people into, investing in real estate.
Completely agree. Completely agree.
All right. So how do people get a hold of you again? Give us all the websites and, your LinkedIn once again.
Yeah. So if you want to find or go to our website directly, it's just HomebaseCRE.com. And if you want to find me on LinkedIn, it's just my first and last name, Domingo on LinkedIn. And feel free to DM me, reach out. I'm pretty responsive.
And what's your handle on Twitter?
Uh, 0x Domingo.
0x Domingo. Okay, we're going to have all these links in the show notes so people can find you and they can talk to you. And they can learn about the future and learn about how to make investors more happy and more satisfied in the future, a better investor experience. With that, I want to thank everybody for showing up. I also want to reiterate the fact that the Blockchain Real Estate Summit is happening again September 23rd through the 25th. So go on and check out the blockchainrealestatesummit.com. They're our sponsor. And as always, this was never any financial advice. This was not investment advice. You should check with your professionals and make sure anything that was discussed here is the perfect fit for what you're looking to accomplish in your life. Thank you very much.
Thank you for tuning in to the Blockchain Real Estate Podcast, brought to you by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening September 23rd to the 25th, online for our global audience. Secure your tickets today at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback helps boost our visibility and allows us to reach more listeners like you. Have a guest in mind you'd like us to interview? Let us know by leaving a comment at blockchainrealestatesummit.com. Thanks again for listening, and we'll see you at the summit.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.